guys, Justin Pickup back with a really important video today. Tax time, we're coming around end of financial year, and there's obviously a whole lot of buzz happening in the media about property investors and negative gearing and all this type of stuff. So because it's in the spotlight, ATO is also putting their warning messages out now. They're coming down pretty hard on property investors this year. So how do we get it right, and how do you make sure that you stay out of the ATO's eye? Biggest thing that they've said in some of their articles they put out is that 9 out of 10 investors get it wrong. They haven't got it 100% perfect. So that's obviously one red flag where they're going to look at things in a lot more detail this year. And obviously with interest rates going up, people's deductions would be going up as well, because people are wanting to be claiming more, because most things would be negatively geared at this point in time. So tips wise is 1, track all of your receipts and expenditure. This can be done through a multitude of ways. What I personally do is every time I get an invoice or a receipt or anything for my properties, I've got a folder on my desktop called tax, and then I've got the property address, and I just literally drag and drop the receipt and the date it was paid. So I've got all my invoices, go see my accountant, here's the folder, bang, and they just filter it out. Makes it super easy for them. So that's what I would recommend if you haven't done that yet. iPhones and tech are really good these days. You can literally take a photo of the receipt, scan it, it makes it a PDF, strata paid, whatever date, however much it was, happy days, it's done. So you're not gonna double cross anything or pay it twice. That's what I've been doing for the last couple of years, which has really helped. The other one is getting a depreciation report. So general kind of rule of thumb is that depreciation can be claimed up to 40 years on a property, and that is something that may help reduce your taxable income. So if you had a property that was $30,000 in expenses and you made $31,000 worth of rental income, there would be a net profit of say $1,000, which you'd pay tax on. If you had a depreciation report that says, hey, we're going to claim $5,000 worth of depreciation, that $1,000 is now a $4,000 negative, and then you'd be due a refund on that $4,000, which would brought your taxable income down by. Depreciation, very important. If you haven't got one of those, certainly reach out to a quantity surveyor. We can put you in touch with the guys who help us with ours and organise that for you too. So very important, depreciation, if your properties are eligible for that.
Oh, say less.
The third one, getting a really good accountant. You don't want just some average Joe Blow who knows nothing about investment properties. You want to get someone who's in the game. You want to make sure they've helped property investors before. They've helped people with 1, 3, 5, 10, 50, 80 properties like Eddie. Really, really complex. You need someone like that who knows that they're understanding and what they're looking for. Because if you're claiming too much and you're trying to get lending in the future, is that going to have a negative impact depending on which lender that you go with? And it really needs to be in line with your strategy as well, also as you're structuring moving forward. But having a look at those receipts, having a look at how they're going to claim things, because some random accountant might just put it off as an expense when it should have been depreciated if you've done a renovation or something. That might flag you with the ATO, who knows? There's a few other variables there which you really need to have an expert look at. So don't just try and get the cheapest accountant, because price is what you're going to get, value is what you receive at the end of the day. So if you're going to pay bugger all, you're probably not going to get a great result. If you're getting an expert in there to obviously help and craft and grow and build your portfolio, that's going to be very, very important as well. The other thing is obviously getting your tax return done on time so you can get that refund back, hopefully, or exactly know where you sit to help you from that point forward. But tax time, it's very confusing. Everyone will have a different opinion of you, a TikTok, all that type of stuff, but you really need to sit down with a licensed professional, bring all your invoices, make sure your paperwork's up to date, and also let them know the goal and the plan so that they can work with you to get to that point. If you don't have those people there, feel free to reach out to us. We'll point you in touch with the right direction. You see the accountant looks after my portfolio, looks after Eddie's portfolio. So, there's nearly 100 properties, combined on that experience there that, just off 2 people, plus many of other investors as well. So reach out to us, make sure you're getting the right advice, and look forward to hopefully working with you soon. Cheers.